Are you tired of entering trades too early and missing out on the big moves? In this video, I'll reveal my new market structure strategy paired with confirmation entries so you can start catching precise trades like the pros. We're going to start on the monthly time frame, working our way down to an entry, understanding the precise entry on a 15-minute time frame. If you're starting to understand structure but still feel stuck when it comes to placing real trades, this is where it all clicks. You'll finally fix the missing half of your strategy, the part that turns smart money structure into trades you can actually take with confidence. No more second guessing, no more late entries. Once you see this, your charts will never look the same again. Click the link in the description to get started. The way we're going to do this is using the new market structure technique. And don't worry, because if you're not sure on how to use this, keep watching to the end of this video. There's a video coming up next which will take you through step by step on how to apply it. The way we look at marking our structures, we need our 3 levels on a chart. We want to have our current monthly high. We need a monthly low. Okay, very simple. And we need a current breaker structure for direction. And that's a monthly breaker structure. So that's all we need. Now, what we're going to look at is where we see our last breaker structure. We're going to use this low in the market. We have a break of structure here to the downside, marking up my high. And don't worry too much about how we're marking up this at the moment. Say the next video will help you to understand how to mark up the structures. Just want to go through in this video to demonstrate how you can get precise entries using this type of structure. And this will be my current low. Now it's a valid low after this current blue candle has closed. And this is a valid high where we see this bearish candle closing down. So now we have here on the way down a bearish structure. We have, and let me just quickly go through marking it. We have an area of supply here. This video is not really going through the supply. It's more about use of market structures with a precise entry, understanding your market structures. And we have another area of supply here, which is a drop-based drop. It's at an area, okay, of premium, which is important. And you see price comes in and we drop out. So this is your monthly time frame. Okay, quickly we can mark it up. We understand we're bearish. Now, what I'm going to do now is go back to replay mode. Let's go here somewhere. And I will briefly mark out this zone here, this monthly zone. Let's mark it off as a monthly supply. And then we'll go down to a weekly time frame, just so you can see how this will work. So with your structure, we can identify that swing to downside. Look at the swing move down, shows as a trend on the lower time frame. It's important you understand how the markets do actually move. Now from here, we do the same thing again. Let's just mark them off. We need a weekly high. We also need that weekly low. And we need that BOS on the weekly. Once you've got these marked out ready, we can proceed with what we're looking for. So we're going to use this breaker structure level. We can see we have a break to downside, creates a new high here, a new low. We have another break here to downside and that bearish candle. That creates a new high here and a low here. We then have another valid breaker structure bullish here in the market. Now that creates a new swing low here and a new swing high here. So I'll just mark the high off. Now you can identify when we push up, we failed to break that high. We just sweep through and we pull back. But as we have this break to the upside, this is still my valid low. Now what we can identify is that we do have this low created, what made that sweep, and it could become an area in the market where you may see a sweep in the market. We're looking for continuation to the upside. We want to see a break of this high because that will be a new break of structure. I mean, we have a low here, a high, that's my current trading range. You're looking for a continuation. Okay, we're always looking for that continuation, and the fact we haven't even come into this area of supply on the monthly is key. I'm not really going to go into supply and demand too much because it will complicate things. If we go forward, we want to just see if we can break out. Let's go forward a few candles. Right, okay, so a strong break to the upside. Now we can move this off. We can move this to here. This is your valid breaker structure level. When we see this breakout, this becomes my valid low in the market. Now, understanding confirmation entry is understanding where we see a shift in structure. You may understand it perhaps as a change of character. Many of you will have learned that over the years, But before the change of character was even on the scene, it was just a reversal of a trend. It's a confirmation of that reversal. So we have price pushing up into the supply. Now to confirm, okay, this supply is held, we need to see this weekly shifting back bearish. That will confirm the reversal of the trend, the reversal of our current structure. So just go forward. So now I can actually mark off this as a high. It's a valid high. So now if we have a push up higher again, that's a continuation. A close of this low is the reversal. Now we just push forward, see what happens. And this is how we can read these structures. So we have a valid closed through. That gives me a new break of structure. Okay, so this becomes your break of structure. This remains my current high, and we're looking for a new low to be formed. And we're just waiting for that to go forward. Let me just fast forward. Okay, now I have a valid on the close of this bullish candle is a valid low here. So now we have a valid low. That is my current trading range. What does that mean now? I'm looking for price to pull back into the new weekly supply up here. Okay, very simple. Yes, we can look to trade this if you understand counter trend trading. Let's go forward and see if price pulls back to this area. So we'll continue to pull back. Now we do nothing until we break the high or break the low of that trading range. Obviously, we can look for potential entries out of these areas here of supply. But let's just follow price. I want just to get you to understand the use of price with these structures. Now, obviously, I know what happens because I was trading this when it was happening. But right now, we're looking at price still trapped, okay, between these two areas. Now, if we continue to push up and push through, that's a continuation with structure, or a shift, sorry, in structure and a continuation bullish. But if we hold now this area of supply after previous tested zone, we have a sweep of that high, we can see a continuation and run lower. Let's just go forward. And then obviously what we can do now, we can look to confirm this. So here, when we see price pushing back in, what we can now do, let me just go back on the replay. And this is going to help you to understand what we're looking at. We have an area of supply here. That's where price is pushing into. So we go down to daily now. And we look for that daily to shift out. And we're going to do the same thing with these structures. We need to have, I'm going to mark it off. There's a valid break of structure there for me on a daily. Zoom in. Let's get right in close, you can see. And this candle closed down, creates a valid swing low. And again, don't worry if you're not sure, watch that video at the end of this video. That will go through in more depth on how you mark all this up. Now, we don't have a valid high yet. Let's go forward price. Okay, now we have a valid high I can mark off. So I can mark this as a valid daily high. So what do I need to see now from here? Well, again, we need to confirm. We need a confirmation of a trend shift, okay? To understand that this supply zone now on a weekly, just like we saw back here, shift out on the weekly out of this monthly zone, we need to see the same thing happening on this move to downside. So if we can now push down, okay, we're moving sideways. We've come back up. We've swept that high as long as it's only a sweep of a high and it's not a break of structure, then we hold as we are. And we're waiting to see if we can run low. Now there's ways of looking for trades here. Now we have a break of structure. So I can take this away. This creates a new break of structure to the downside. It's our confirmation out of that area of supply, okay, on the weekly time frame. This then becomes my high in the market. Okay, so my current trading range high. Price is now continuing down. Now we can look for where we expect price to want to bounce from. Previous area of demand, perhaps. Okay, we don't have a valid low created. Let's go forward. Okay, now we've pushed into that demand. Let's see what happens. We've swept the low of that demand, and this candle is a validation of this low. So now we have a validated low. Now what we can do, we're now expecting, when we see these moves, we're expecting at some point a pullback, okay, against this trading range to then look for the continuation lower again. Now all this is going to make sense. We're confirming, okay, let's go through this again. We went through the monthly time frame. With that breaker structure, we had our range, we pulled back to a monthly supply. We've confirmed that supply by seeing that shift out, okay, with this new structure technique. There's our shift of structure, leaving a new supply on the weekly. Now we've pulled back into the weekly supply, and we're now confirming that shift right here with a new shift of structure, okay, that confirmation reversal entry. Now we've pushed down. This indicates now the trading range I'm in. I'm looking for a pullback. And from this area, we've just swept this low of this demand. So it's been taken, but very often you're going to find what sits below a demand, okay, is what we call an imbalance. And what do we have sitting down here? An area of imbalance. And that's where we're seeing price potentially now pushing higher from. So what we're going to do, we're going to look now on a 4-hour time frame. I'm going to show you how to look for a precision entry. So keep watching if you want to be able to understand how you can look to use this all the way down to 3-minute entry, okay, or a 3-minute zone. I'm going to mark here and show you how you can do this. Now, what we're looking for now is the 4-hour time frame structures again. So we need to mark out our 4-hour high, our 4-hour low, and of course our 4-hour BOS, and this will all make sense. Now what we're looking for the reason we see that low being created on the daily, we're looking for a swing pullback on the daily. What's going to identify the start of a swing pullback on that daily? The 4-hour confirmation reversal, okay, so the trend shifting back bullish. We have a valid breaker structure here to the downside. We zoom in here. Okay, it's better to see these candles up close. So when we see this break here to downside, we have a valid high created here. The market pushes down, we have this pullback, and this creates, okay, a new low. So the market then quickly pushes lower again, creating this new low here. We're going to just move this daily down, and then we have a small quick break of structure there, which is a valid break of structure. And then we have a new swing high here. So you start to see how price is now coming down into this area we've already seen. We have a nice shift bullish. And what happens is now we have, okay, this is a new BOS bullish. That's the first time we've seen that bullish reversal, including that bullish low being created on the daily, confirming that price is heading higher. So when we see this, what we're going to do now is let's just bring this down so we're not in the way. Actually, let's just take it away. You know it's a low there anyway. What we're going to do, we need to look for a reason to be able to take a buy. Now, on this move up, for me, we want to see price coming back to be validated for an entry to go back long against your 4-hour high. Now we haven't created a 4-hour high yet, so we're going to create a 4-hour high first so you can see how this is created. Let's go forward a candle by candle. Right, so still nothing. Okay, I'm looking for a close down. Okay, so there is a close down. That's validated this high. Now there's ways we look at our entries. I'm not going to go into detail on that because a lot of this is explained in that 90-day profit trading system and other videos in the channel. This is all about making sure you're mapping your structures correctly, reading price on the chart. So many of you do not read price correctly. So we have this push away. Now this was an area which has now been closed through. I'm not going to go into detail what it's all about, but we've closed through on that bearish candle. That tells me straight away there's one place we're going to go right now, and that is for this low here. I'll mark this out as an area of potential liquidity. So I know price on the 4 hour is going to want to run this low potentially. So now what I need to do, I need to find down here. And what we're going to do is do a replay back here somewhere. So where we see this pushing away, okay, instead of this high, just so you can see this in real time, 15-minute time frame. Let's go forward. So we're looking for a area to be created. Now, if we look, I had a previous area here created of demand, but that got tested into, okay, with this candlestick. So this was the area we wicked in, so it's still a valid zone, but it is a tested zone. And it would also mean I would have to see price want to run this low. It's going deeper. So yes, it's a zone that is already tested now for me. I like to see a fresh zone left behind. So I'm going to go down to 5 minute now. I'm going to have a look and see what we've got left over. This is how you can look for your precision entries. So we have here a push up. Okay, very, very small leftover area here, but we have a better looking zone here. So you have this mauve left over. Okay, so this looks like a nice sell to buy move, which creates an area of demand. But obviously, again, we'd have to bring this down to this low, and it's been fully filled by this move. So it's not a great zone. Yes, we still have this small leftover gap just here as well. If we now go to a 3 minute time frame, let's have a look. We can fine tune this even better. So again, we can see this is the level. Now we can fine tune it to here. That's our leftover demand zone. And again, if we look to the left, we have a very small area just left over below this low. But this is the first demand zone, which we also have this low here. Okay, so you can see this is our low in the market, where we actually looked at that on the 4 hour as a liquidity low to be taken. So we're just going to mark this across, okay, to the right. That is the zone I want to see price coming into. So now what I can do, I can look to take a buy. So let's just zoom this across. Once I've seen this, there's my break of structure area. That becomes a valid area that I can look to take a buy from. Okay, now my stop can either be below the low of this zone or the low of this low here. So what we're looking for a target, well, let's just go through back to that 4 hour time frame, and we'll just go back to where we had price pulling back. Now, hopefully you are continuing to understand what we're doing right now, going through these different time frames, confirming it. If you are, please drop a comment below and let me know you are understanding. If there's something that's not clear, then let me know what it isn't clear, and we'll look at going through it in more detail in another video. But what we're looking for is that continuation. Let's go forward. We need to find that pullback. Okay, we're looking for that pullback. There's our pullback. Okay, so there is that liquidity level. Now look what sits right below that level is our zone we've created, and that's where we're looking for this entry. So our target would be, okay, that 4 hour high. So we've dragged this across. Now our zone was about there somewhere. So zoom in. Now obviously you can confirm this out if you wish as well on a 15 minute for a better confirmation. But we understand that price has only got this level really here. This is an area of liquidity I'm expecting price to run. So understanding your structure, we're now bullish, looking for pullback to this area. Now that's at least a 31 hour. If you're looking at price to come back, okay, if you use this as a low, I believe down here somewhere perhaps, you can look at around about a 22 hour, which is still a good trade. It gives you a bit more room in the trade. Now, if we go to a 15 minute time frame, we can follow price on a 15 minute as well. So we can look at how price is shifting here. And again, we do the same thing. We have this move up. It did break structure, so we'll mark that off as a BOS. This became my valid low, a new BOS. As price continues to shift down, this is a new break of structure here. Okay, and yes, this is a new low in the market. So we're looking for the continuation low. So let's go forward. The market has held. Okay, and now what we see is a new break higher. Okay, so we broke this high. We'll make this a 15 minute high, and we broke out bullish. Now we've created a new high. Okay, so you can start to see how price is shifting. So at this point in time, we're nowhere near an area to buy from. So just mark this off as that 15 low. So we know that we're looking for price on this 4 hour time frame to pull back to this area of demand down here. That's our only demand zone we can look to buy from. Now we can either just use this set and forget entry strategy style, or you can look to confirm this level, okay, on the lower time frames again as price comes back in. But we'll look at the structure now on the 15. Let's go forward. Okay, so now we've broken out lower. So we're going to follow this structure. So now we've broken that structure low, we can mark this across. Okay, this is what I would do on a day-to-day basis when I'm following price. This remains my high. This was my low. If we pushed lower, then I'm going to have a new. When we didn't push lower, we pushed higher. So do you see how price has come down, failed to run this low, and a new break of structure bullish? And you're perhaps saying, well, hang on a minute, price is now pushing away to the upside. You've missed the move. And that's where fear of missing out is going to come in your trading. Okay, so I'm going to mark this off and lock this in position for now. Now, I don't have a new high. That's my last break of structure. We've come nowhere near this zone that we highlighted back here, okay, on the lower time frame. So I'm not prepared to buy. If this heads up from here and takes the high, so be it. You missed the move. The fear of missing out will create more losing trades for you. It did for me when I first started trading. So try and not let it affect you. Let's go forward and see what happens. So we created this as a new high. So we now have a new high in the market. We're bullish, but we haven't come down to our zone. So we want to see a further drop. So what we're looking for, another break of structure, okay, a new swing high. Then this is a valid low here in the market. That's your valid break of structure there. And we're looking to see if we can shift back bearish or continue higher. So we sweep the high and we're holding at this area. Let's see, we are going to go lower or higher. And we're hovering around and now we've broken out lower. So now this becomes a new break of structure right there. Okay, so there's your break of structure. And then this becomes my new swing high. And what we're going to do, we're going to close it into this price again. See, now if you don't lock this in place, it would keep moving and it would be very irritating to me. So now we're looking, as this candle closes up, that bullish candle, that creates this a valid low in the market. So now my break of structure is here. This is my valid high. This is my low. And the market is likely to pull back into this area or this area of supply and continue to fall lower. So let's go forward. So currently we pushed up into this area. We just wicked through. So now we're likely to go into the higher zone, which we've just done on that candle. And we'll be looking to see if we can hold. We don't, we go back bullish again. So now structure is shifting bullish. So we're going to go to this area. Remember, all this time you're not trading, you're waiting, you're watching price. And now your new low is going to be down here. Now a new high has not been created. We're going to go forward until we create a drop. We have a drop. This becomes my new high. And we're bullish once again. So let's go forward to see what happens with structure. And straight away we push back bearish. So if you're looking to be buying here, okay, you're seeing a sweep, whatever, and you're buying, you're looking for price to run to the high, and you've not done your research, not found the ideal location pinpointed by using your structures. Okay, and down here, which I didn't go through, that 3-minute zone of demand is a structure area as well. Now price is running to your area. Yeah, okay, so we can say that in hindsight, I know what is going to happen, but you test this out in live conditions and you'll find how it's going to help you with your trading. We went through, we found that daily low. We then found the 4-hour shifting structure. We then went through to find a precision entry zone to buy from. Now it's going to go forward from here. We've entered into that zone and we push back up. Now at this point, let's go in. This is still a bearish move in the market. So we've still got on our 15-minute, a break of structure here, a current high, and my new low is down here. So that's what the 15-minute is showing me. So we're expecting price to come back to continue to go lower. This is where you've taken your entry. And again, like I said, you could have used your stop below the low of the zone you've got marked, or this swing low for safety below that swing low is going to be better. And now let's just see if price continues to push up or down. We're going very sideways. We slowly are pushing higher. And if you've waited, say this is the set of get entry, if you waited for this shift in the 15-minute, you've waited too long and you've missed the move. Okay, so not all trades are going to work on a confirmation if you're waiting to confirm this zone, but look at the size of this zone. Why would you want to confirm it? You've got such a small zone there. You're expecting a wick in and a continuation, and that's what we get. Now, when we see this break of structure, I can bring this across. New break of structure is now bullish. Right there, there's a bullish break, and my new low is here. Okay, so that's my new structure range, and you just look for the pullback again. But that is how you can look to capture 22-hour trades. Now, I'm not saying that all trades are going to be this great to find and capture, but once you understand reading your structures, okay, reading all the way through multiple time frames and applying it this way is going to help you much better in finding better entries. Imagine transforming your trading in just 24 hours. More precision, more confidence, and no more missed moves. These 3 smart money tricks will get you there fast, so don't miss out. Let's just start with replay mode and we'll work our way through understanding how you can use this smart money structure. So let's just mark off here somewhere. So you can see using this on a replay mode is going to help you to follow along with how I'm doing this. Now, let's not worry about too much price back. Let's just mark this off where we see price closing down. Potentially this could be a high. Now it is a higher point there in the market. But let's just say this is our high for a break of structure. So we look for a break of structure to the upside. Let's just go forward and let's look for that break to the upside. Once we see this, we have a valid break. Okay, we have a valid break. Understanding your break of structure is important. Now we need to see for a valid break of structure, a full candle with a body close through that level, like you can see on this candle. A wick is not a valid break of structure with this smart money structure technique. So you cannot see this or this wick or even this small wick here as a break of structure to mark a new break of structure. We have to wait for this level. So we now just back this off. Let's make this a thicker line and we're going to add a BOS to this as well. So let's add BOS. Let's make it a dark in color and we'll make this bigger and make it bold. Actually, there we go. So we have a break of structure to the upside. So we have that break of structure, we need to find our valid low. Now to look for a valid low, using the smart money structure technique, we look from the candle that breaks out, we look back, we look for the first candle that closes down. So this is our first point here where we see a bearish candle closing below that previous candle's low. That means we can look for the lowest point, which is right here. And we can mark this out, let's double this up as well. And we'll add this as a current low in the market. So this is going to be a daily low. We'll add this below and we'll add it to the left and we'll make this bit bigger. Okay, so we have a daily low. In fact, let's just make that a bit more bold. And back here, we'll make that bold as well. So now we have a valid break of structure to the upside. When we saw this breaking down, this creates a valid low in the market. Now, if this hadn't have happened here, we would have had a valid low down here. Many of you may be saying, well, using structure, this is our break, this is our valid low in the market. But using a smart money structure technique, that's not the way it works. And again, follow along with this video. And if you're still not sure what's the next one, it goes through much more detail. So now we have this valid move of the upside. What we look for now is another close down like we see here to downside to create a valid swing high in the market. Do we close down here? Well, let's zoom into these candles. If you're never sure, zoom into price. That will help you to see if there's a valid close. So this is indeed a valid close. And we can also check a low is 507. The close is 461. That means we can now mark off this as a valid high. Now the reason we can mark it off, let me just mark this off here. This is a valid close to the downside. Just like we see here to downside for the low, we now have a valid high we can mark. So we'll mark this off as a daily high in the market. Let's place this to the top. So now we can zoom back again. We have our valid break of structure, our valid low, and a valid high in the market. So that's how we can start to read price. So let's now take this a step further. Let's just follow price. We want to see price pulling back to break higher or reversing structure. Let's see what happens. So we get a wick through. That does not validate or break a structure, but then we get this candle breaking through. Okay, so we got a valid reversal in the market. Now, the reason I want to do this is to show you how we look for our next levels. So when we see this candle here, we mark that candle off, closing through this low, that's a valid reversal in the market. Now, when we look for a valid high on a bearish move, we're looking for where we see price closing above a previous candle's high. Now you can see here, we do not close above, only here. So this high remains where it is, the highest point after we saw this candle closing above the previous candle's high. Now, if it had happened down here somewhere, let's say this is a bullish candle closed above this high, then that would have become your new high in the market. So now we have a potential reversal in the market. So we need to look for a new low to be formed. So this would in fact be a new breaker structure. So we can mark this off as a new breaker structure right here in the market. So to look for a new valid low, we wait for the same sequence this time for a close to the upside. Let's go forward and wait for a close to the upside. You can see we get a strong push down, and this candle here closes above that high. So zoom in, we mark it off, and then we'll zoom in. So now you can identify when we see this candle closing up above that high, we can mark this as a valid low. So we didn't mark this as a valid low or this low. We wait until we get the close up to mark that low. So now we have a reversal in the market. We went from a bullish trend to a bearish trend, and now we've got a strong push to downside. What we look for now is a potential pullback again to run the daily low. So that's how we can look at using this type of market structure, the smart money market structure. If you want to take your structures further and to have an ability to find potentially high probability trade setups, then we apply trick number 2, and that's understanding multiple timeframes, or the 2 time frame approach in this occasion. So you can see how you can use 2 time frames to find good entry points. If you're still struggling with this market structured concept, just drop a comment below and let me know you are still struggling, because I need to know if this is now beginning to become more clear every video we do. So we look at the area from this high to downside. So now we have a potential trading range. So we look for price to pull back against that trading range, and we look for a potential drop to downside. So where would we expect price to go? Well, understanding a concept, we can mark out from this high to low. We understand a concept of what we class as discount and premium in the market. So anything below the 50% here is classed as discount. Anything above is classed as premium. When we're looking for a pullback to sell with this move on this trading range, we want to see price pulling back to premium before we push lower. So you can see we've pushed up above into this area. So now what we can do, we can use that approach of multiple timeframes. So this is just a daily pullback at this phase, because this is our daily high, our daily low. We cannot do nothing until we see a break to the upside or break to downside. So now when we drop down to a 4-hour time frame and zoom out, we can still see them on this 4-hour time frame. So now what we have in theory is the daily to the downside with a swing move on a pullback. So now we look at price on that pullback. We can start marking out again the same thing. So we can mark from this high across as a valid breaker structure. So a BOS. Let's make this a bit smaller this time. So we have a valid break to the upside. The market, when we see this break to the upside, we're looking for the last time we have a close down for our smart money structure. So this is understanding now this second trick is the use of the multiple time frames. So this would be a current low in the market. So this is going to be our 4H low. And we will place this to the bottom. And now we have a 4H low. Let's just make this a bit smaller again, so it's in line with that breaker structure. So now we have price pushing up. We now have a close down on this candle. So let's just zoom in to these candles. So remember, at this point, we're looking for potential sell. I'll go through how we do this. So when we see a close down, let's say here to downside, then we can mark off the highest point and have this as our current range high. So 4-hour high in the market. And we'll place this to the top. So now we have a trading range from this low to this high. Just like we saw, okay, with the use on a daily time frame, we look for price to want to pull back into our lower half, below the 50%, to look for a trade. Let's see if we get a pullback. But remember, this is against the daily. We want to be looking to sell. So we really want to see the use of multiple time frames. So we've actually just had a break of structure anyway. So let's get rid of this. Now what we do, we can replace this with a new break of structure. So this becomes a valid break higher. We look back, the last time we see it close down is this candle. That means this now becomes my valid 4-hour low. Do you see how the range was not from this low, but from this low using this type of smart money structure? Again, for a 4-hour high, we have to wait. Let's wait for a close down. We have a bullish move, we wait for close down. Now we've got a close down. This becomes my 4-hour high. So this is using the trick now, number 2 of multiple time frames. There's our daily structure. We're pulling back. We're currently still bullish. So what do you think you want to be looking for to be able to take a trade? If you know, leave a comment below and let everybody know that you already know exactly what you should be looking for next. If you said for that reversal to break that 4-hour low, to show you a shift in structure, when we see price back up into that premium, then you got that right. Let's go forward with price and see what happens from here. Okay, so it looks like we are pushing back higher. Again, that we haven't come back to that 50% or below. Let's mark this out from this area to here. We need to see price pulling below the 50% area. Let's go forward a few more candles. So if we zoom out, let's look at what happened here. Did we break out? We have broken out. So we didn't go quite close enough. That's why it's important to go closer. So if we now just add a new break of structure first here, we should have had a new high created up here once we saw this candle closing down. Now looking for our current low, we look back, where do we see the last time it closed down? It closes down here. That makes this a valid low in the market. Now let's zoom back out and look what's just happened. We've got that pullback phase on the daily using our smart money structure. We're above the 50% area right now, and we've just seen a 4-hour shifting to the downside using that smart money structure. So your trick number 2 shows you the use of 2 time frames, multiple time frames when looking for that trade. So now, what do you think we're looking for? We're waiting for a valid low to be created. So let's go forward, and there's our valid 4-hour low. So this becomes a new break of structure, a new valid low. So now what we can do, we can make this a break of structure, and this is our valid move to downside. So now we're going to look at trick number 3, and that's understanding how we can look to take a trade with the use of this 3rd trick. So first, let's look at what we've got. We've got price pushing down. We can mark this off. Where is our potential area we look for a trade? Well, it's going to be in this, above this 50% area. So this is my last buy to sell move, this area here. This is what we call an area of supply in the market. And this is where we look for price to pull back to this supply, where we can look for an entry out to run back towards the 4-hour low. That is how we look to use an area of supply. The 3rd trick is understanding that we have orders left over in these areas. What we can do here, we can use what we call a set and forget entry style, or we can use a confirmation entry. So at this point, we've used multiple time frames. We've used that smart money structure. We're looking now for price to pull back to this area, because this is where we see that shift to downside. Let's see if we do pull back first too, so we don't pull back into that 50% area. So now that tells me we have a continuation to the downside. And what we can actually do is create a new break of structure. But I still like to see price pull back to this area, because it's the area where we see that reversal out. But now we have price breaking this structure, we can have a new high created. So our high is now going to be right here. Why? Because where we see the last close to the upside. So we close up just here to the upside, that creates a valid high. We don't have a valid low yet. Let's go forward. Okay, so we now have a valid low when we see that closing above that previous candle's high. So there is my current trading range. So we are bearish still on the 4 hour. We continue to be bearish here, but I really want to see a good entry coming back to this area. Now we can look to take a simple set and forget entry here. So let me just mark this off. We can look for the set and forget entry. The reason we can do this is because we know we're coming out of this premium area on a daily. And if we're going to go for a daily, using a daily as a higher time frame, this would be my potential target. Looking for price to come back, okay, to this area of supply to run down for this daily low. So there's a trade that I can use with the 2 time frames we have of the 4 hour, okay, and that daily time frame. That is going to be my confirmation entry where we pull back to this area. We're going to be shifting back bullish to get to this area. You want to be confirming this area of supply. And the way we can do that, we can use multiple time frames for that confirmation entry, which means we go down to another time frame of our choice, which would be for me a 30-minute. Let's go forward and see what happens with price here. So we have shifted back bullish, but we are looking for price to come back to this area for that set and forget entry. Let's just see if we do get triggered into that trade. Now we have a new break of structure here to the upside. So I can mark this off as a new break of structure. So in theory, we are bullish again on this 4 hour time frame. So any entries here are going to be much higher risk to take a trade with a set and forget like this style than it would be if we just took a reversal out of the lower time frame. But if we're taking an entry on a lower time frame, our target is going to really be towards this 4 hour low instead. Let's now look at what happens when we enter this area. Let's just go 1 candle forward. Do we enter? We haven't quite triggered in. And now we triggered into that zone. We see we've just been triggered into that zone. Now the reason this is still a good zone because it's the highest point where we see the reversal out. If we now go to our 30-minute chart, okay, we don't have a valid 4 hour high yet to mark. I don't believe. Let's double check we didn't have a close down. No. So we don't have a valid high yet on the 4 hour. So what we can now start doing is we can use again our smart money structure on this 30-minute time frame. Let's use this as our last break to the upside. Let's make it a smaller level and we have a BOS. Make this smaller again. And it's a 30-minute break to the upside. Once we have that break, we can mark off our last low. We look from this breakout point, and this is where we see the candle closing down. So this becomes my valid low. So let's make this a 30-minute low, and we'll place this below. So we have a valid low. Let's just actually make this smaller. Let's keep it around the same size. So once we then see it close down again, now we can zoom in. We have a close down on this bearish candle, okay, below this candle's low. That gives me a valid high at the highest point I can mark. And again, we'll put this as a 30-minute high and place this to the top. Now you can do the exact same way yourself. You can mark this up just like this. So once you have that valid trading range, remember what do we look for? Well, if we're going to see a continuation to the upside, we want to see price coming back to 50% or below. We get that. Okay, so prices come to that area to fill this imbalance into an area here, and we've pushed up to run this high on that 30-minute. Let's see if we're going to continue higher. Okay, and we get a break to the upside. So now we can create a new break of structure. Just like you did on the higher time frames, we do the same thing, this smart money structure. We get a break to the upside. We look back. This candle closes below this candle's low. This now becomes my new low for 30-minute. We don't have a valid high. Let's keep going forward. Let's see if we create a valid high. Okay, so we've got a valid high. Now we have a valid high. Now, we're inside our 4 hour zone that we had previously marked. Remember, this was the area where we saw price coming back to. So now we've come to this area. What would you want to see? Well, again, this is our valid 4 hour low. We don't have a valid high yet, but this is our low, but we are bullish. But if I'm to see this area hold and shift coming back to downside, I can look to hold that for this low, or at least an area down here where we have these lows created. But let's just see what happens. We could run higher and just run through this area and continue to go a bit higher first with this chart. If we look back where we are, we have, this is our daily move. And we can start looking at a reason why price shifted out from here. Well, we have this high we can mark off. So price ran a high here. So we could mark this out as an area of liquidity. So we ran through this high and we shifted bearish. So we have a reason there why price is shifting out. We have the 4-hour structure shifting out, leaving this area of untested supply. Let's just see if we do continue higher or go bearish. Okay, so we wicked through this low. There's no break of structure here. We could still see a run higher from this point. Let's just see if we do go higher. Now the market did attempt to go higher, brought in some buys, and now we've shifted bearish. So understanding your trick number 3. We've used here, okay, your market structure. You've applied the use as well of the multiple time frame. This now becomes a new break of structure. Let's use this level. We can mark off a new high. How do we find the high? We're looking for the last candle that closed bullish. This is the last candle that closed above, so that became the new high. Now we've confirmed that prices come out of this area of potential for our supply, and we've left this as a new area of supply. Now I'd like to see this is a full area here. This is my buy to sell mode. So now we have a potential new supply I can look to take an entry from. Now we don't have a valid low created yet, but what I can look to do from here, as we have a valid breakout, I can look to sell from this point, and at least look for price to want to run for this low. That's if we're going to see this area of supply holding. Now if we do shift back bearish on a 4-hour as well and shift through this 4-hour low, then we can hold it for this low down here, which is that daily low. So let's just go and see what happens. Now this could easily reverse and stop me out, but you're starting to see the use of the multiple time frame here. Let's just go forward and see if we continue lower. Okay, so we've continued quite low here. Let's just see, we get a pullback. So now we have a valid pullback. Now we have a valid low. Now, if you're thinking about money management here, how can you use money management? Well, you can look for price to continue bearish with that 30-minute. So if we did consider, we entered, let's see what happens first. So we have been entered. Let's see if we continue to run for the 30-minute low. Again, why is this a good area to trade? Because we're above the 50% inside an area of premium. We could continue to blast through this high. Let's just see what happens though. Okay, so strong push out. Now we've broken back to downside. That now gives me a reason to bring this trade potentially to just above the highs here. Nearly risk-free trade with a stop. We're looking for price to continue slow. Now obviously this isn't going to be the risk to reward. Risk to rewards around 5 are there. But you can see we can now bring our stop above those highs. Now we'll let this run. Let's just see where it goes. So price is pulling back. Let's speed this up and see if we get stopped out. 7R. So let's go a bit quicker. And we can identify that we are still continuing to run lower here. Bring this across. And remember, we could still have that trade that we had on as well from this high. We looking to run for that daily low if you want to take that option. And you can see the market is pushing down and we hit that full target. So this has worked out quite well. Now the reason this has worked is because we've applied multiple time frames here, and in fact it's 3 time frames. We've got the daily pulling back into an area of premium, right? On a swing pullback. We've swept this high of liquidity. We've created a reversal out on the 4-hour, pull back to an untested area of supply. Remember that third trick, using your supply and demand zones. We've come back into the area of 4-hour supply on a 30-minute, and we've shifted out bearish on a 30-minute, come back into this area of potential supply, using that smart money structure, the combination of multiple time frames, the confirmation out, and then we get the entry for a nice trade. So let's just see what happens if we was to take partials here to run for this daily low, because at the end of the day, that's where we're looking for. But if we go back to, let's just bring us across, let's go back to that 4-hour time frame and see if this one is going to work as well. That is our set and forget entry for that daily low. Let's go, okay, let's bring this closer. So we've got a couple of trades you could have had here using this method. See what happens. So the market continues bearish with a 4-hour structure. we'll pull back, and let me just pause it. If this trade here was still on, you was at break even still, or you've taken some profits here, you didn't take full profits at the 4-hour low, you would have been stopped out at this point. Now, understanding structure, you probably would have been stopped out around about above this high, but understanding the use here, you probably would have taken full profit at the 4-hour low with a 30-minute entry, but you've been stopped out. So that leaves this 4-hour certificate entry off this zone. Let's just see if we get stopped out. We'll be at break even at this point now. Let's just see what happens. So we continue to run bearish, and it did hit full profit target. So that's how you can use those 3 tricks in the next 24 hours to turn your trading around. If you're tired of second guessing trades or stuck wondering why structure still isn't working, this is your turning point. There's a proven path where smart money structure becomes second nature and consistent profits stop feeling random. That's what Danny found after nearly $300,000 in losses. He didn't just learn structure, he mastered it and rebuilt his confidence from the ground up. If you're ready for that kind of shift, your next step is simple. Click the link in the description to secure your priority pass and start mastering smart money structure today. Currently on the CAD Swiss franc monthly time frame. Remember, when I first do this, what we're looking for, okay, is we're looking for previous price movements to give us an idea. Now we can either look just back from current price, okay, short term back, or you can go further back in time. It all depends on your choice. It doesn't really matter either way, as long as you are using this structure technique and it's valid when you're using it. Let's take this off. Again, leave any comments below if you're finding anything with your structures that you are struggling on. Leave those questions below and I'll answer everyone that I can to help you understand structures better. So for this experiment on the CAD Swiss franc, I have not looked at this pair at all. So this is the first time myself looking at this pair. Current price sits right here. I'm going to look back in time. Now we do have this big candle here, which would put me inside a large trading range here at the moment, where we've now just come down to this current previous low. Now I'm going to look more from this swing high instead of this candle, so we can look at the current move down and understand where the market is moving. So once we identify, okay, remember identifying this high as a valid high. If you're not sure how we do that, please go back and watch last week's video at the end of this video, because it's going to help you to understand the correct way of making sure that these structures are always valid, assuming to price. So reading this is a swing high. If we mark this off as a swing high currently, so you can see how I do this. This is a swing high. Okay, this is a previous break of structure. Then we have this as a current low in the market. Let me just see. Yeah, this is a valid low in the market. So this becomes a valid monthly break of structure. Now, it all depends if you use that larger candle back in time as your range, but we're using this as a trading range currently. Now, a valid pullback is this candle here. So this becomes a current low. So this would be my trading range I'm in. You can see price gives a short pullback and then we continue to be bearish. We would then have this as a new high in the market. This would become my new low and this would be the break of structure. Okay, that's how simple this is once you start to understand implementing this strategy of these structures. Look, if you are struggling, you haven't got that consistent profits in your trading, it's very stressful in your trading, then this is what you need to be learning. This is the change I'm making in 2025. I suggest this is the same change you should be making. Now, again, we see the pullback in the areas here of supply on this wick zone. We then break to the downside. Once we start to see a pullback, which we don't have yet, we will create a new low down here, but we cannot mark off this as a current low, but we can mark this off as a valid break of structure. So understanding where we are in the market, this is a break of structure for me. This becomes my valid high. My trading range has not yet been formed. I don't have a valid low to mark, so I'm going to remove it. We don't need it on there at the moment. We do have a valid area of current supply. where we see the break to the downside. Now again, it's not a supply I want to be trading from really until I see a valid swing low created for my trading range. So I'm not going to trade it at the moment, but we do have potential bearish bias on the monthly time frame. Simple as that. Now, any questions on what we've just gone through, drop them below, rewind the video, watch this section of the video again so you understand why I've marked these levels. So down to the weekly time frame. These videos just to really show you any pair, okay, every single time frame, the same process will give you that bias and help you understand how to trade this. Now, if I just do the same thing now, we look at this here, we have a break of structure here. This is a valid high. We have another break of structure bullish. Now, currently, a low would be here. This would be my trading range. We break bullish again. My low would remain here. Okay, this is then my swing high. This is my low of the trading range. The market comes back and we break to the downside. Then I have a valid low created here. And this would be my valid range high. That is it. That is how I quickly look for those levels. That means I have a valid weekly high marked here. Where are you? Weekly high and a valid weekly low is marked here. Okay, and then we have a valid break of structure we would mark right here on a weekly. And that's it. All done. Now we understand the trading range we're currently in on a weekly, which makes sense because we're seeing the monthly dropping lower and now we're seeing the trading range we're in on a weekly. Now for an area of supply, I'll briefly show you in this move, this is the current origin supply. That's the area I would like to see price pulling back into for a run for the week low on that weekly. But we also have imbalances here to downside. Now, understanding imbalances, we have a leftover imbalance here and a leftover imbalance there. But again, if you want to learn more on this subject, there is some more in the channel, or you can take things further, grabbing one of the current 5 spots inside that 90-day profit trading system. And again, the link for that is in the description of this video. So that is my current range on the weekly. That gives me a bearish bias. On the daily, we do the same thing. So we can either come back from this weekly move for daily, or we can start here. I would personally look to start from this move here. So let's say we have this drop down. Okay, we have no valid, this is a valid push up. That means this becomes a high in the market. We break structure, new high is created. Nothing, this becomes my current move. So for daily, I can mark this off as a current high. So this would be my daily high, but my low would still be this low here for a daily low. And a break of structure would also be this move here in the market. This small move is not valid for me. This is not a valid structure. This is just one swing move down. This is a valid swing high now. And that means I would have a valid area of supply. Just grab the right tool. Okay, I'd have a valid area of supply here and an area of imbalance there price could push into yet for a run lower. Okay, we are looking for the weekly to run lower as well, and we are looking at the monthly to continue lower. So it gives you an idea of understanding your structures. Now we go to a 4-hour time frame. We can do the same thing on a 4-hour. Look at current price. We'll look at this move here to downside. Let's say we broke to downside, and we could even say it's this low here. Break to the upside, new high, new break higher. This becomes a low, we break bearish, this becomes a new high, and that's it. That's my current low in the market, but it's not a valid low yet. So just like we see on other pairs, which was the monthly, we can do, sorry, on the other time frame, we can do the same thing here. This becomes my high, oops, get the right tool, my current high on the 4-hour time frame. Now, please let me know if you are enjoying these videos. That will show me if you put a thumbs up if you are enjoying them, actually, because then I can see that these are helping you to understand the way we look at marking structures. Look, structures is key. If you're not using structures correctly, you're never going to find that consistency in your trading. So you can see the break to downside. This leaves, okay, a current high and my area of supply I can mark off. Now the market has pulled back and continued lower, but I still don't have a valid low I can mark from a 4-hour. Now if I see a close up here above this high, this bearish candle, it'll give me a valid low to mark here. So we do have a leftover supply here created. So if we do see a close up, we could look for a sell out of this supply, okay? Or even this supply above, where we then have an area of liquidity created. So that is the 4-hour time frame. Remember, we're looking for pullback here on the daily, but we are now bearish on a 4-hour. We are bearish, okay, on the daily. There's a larger swing here on the daily. We're pulling back on the daily. So we're looking for a continuation down. Now we could see the 4-hour shifting bearish here, and we never see more of a pullback on this daily, and we continue lower. But we go with current structure. So we are bearish on the 4-hour. Now we go down to the 15 minutes. We can start looking for our trades. And again, we'll do it from this current high in the market. We'll just go back to there. So let's say we see this is a break of structure bullish. This is a current low. We went bearish. This becomes a new high. We continue to drop. And my first pullback is valid is here. That's a new high. We continue lower. New low. New high. Okay, that becomes a new low. We break out here. That becomes a new high. This becomes a new low. And by the way, that was the previous low when we broke out here. Now we have this high, and then eventually we've broken through there. So let's take all this off, and we'll zoom into that area of price. Let's zoom in nice and close, and we'll go through this step by step. So what we had was price was breaking up here to the upside. This left this as a current low in the market. We have now seen this bearish candle breaking through. That gives me a valid BOS on a 15 minute. Now looking for my current swing high becomes this high here. That's my valid 15 minute high. And again, if this still doesn't make sense to you, go back and watch last week's video where we go in a bit more detail exactly why and how you look at marking these areas. Now we break down, okay, we don't have a valid low until we start to see this pullback. So that becomes my valid low in the market. So this now is the 15 minute low. And when we look at areas of supply, we do have a valid supply here on this time frame. Price is now reacting from. Look at how we've come up and we've tested it and had a reaction. Now it's not saying we're going to look for a sell now down from here, because we could still see that pullback further on a daily. But if we're to see a sell, okay, on this area, I would be going down to lower time frames like the 5 minute, 3 minute, 1 minute until I find an entry to confirm this area of supply. And that's how you start to find higher probability trades. If we just pop up to the 4-hour time frame, okay, we are bearish, but we haven't created a swing low. So for me, we could see a continuation lower again on that 15 minute. Okay, and we could see another break lower, and then we see a pullback on this 4-hour. Or we could see the 15 minute breaking structure here again, which would be off the high of this candle, I believe. And then we start to see a pullback into this area running this high to then see it fall. Okay, there's ways you understand this, and all of this you can learn much more inside that 90-day profit trading system. When we're looking at our structures, a technique that I'm going to teach you, what we are looking for is, let me just get a box. When we see price moving bullish, okay, so let's say we see the market moving bullish. Let's just change this color to something a bit more easier to recognize. Actually, wrong one. Sorry, do that again. So we have a bullish market here. The market is continuing to move up. What we're looking for is the market to shift structure. And for this to happen, we want to see the low of the last bullish candle closed through. So you need to see the market closing down, okay? And it has to close with a body close, not a wick. And you want to see the market closing back down. This will indicate, sorry for the rubbish drawing, but this is going to indicate then that this is a new swing high in the market. Okay, very simple. Now, as price continues to fall down from this point, we look back where we find this same pattern, and what that's going to form is going to form my swing low. Now, all of this will go in more detail in this week's video as well. And you look out for that, it's coming this Sunday. But this just to show you that is the idea. You're looking for body close of the levels. Now we'll see this as we go through marking up this chart. Let's take this off. Remember, there's no script in this video. I'm just going along, teaching you exactly what I'm doing. Now, the way I like to do this, I like to look back first in time, just to have a look. And we're looking for where we see price pushing up. Okay, so let's just say we have a breakout here. Okay, so let's just say this is our first area. Let me get a pen. We see a break from this area to the upside. So we're going to follow price from here. And I'm going to do it with a pen first just to show you. So we see a break of structure to the upside. This then becomes a new swing high. We have a swing low. We have a break to downside. That's the first time we see the bullish move turning to a bearish move. As the market pushes down, I have a new low here. Okay, and then we have the market creating a new high right here. As we break down, we then create this new low. So you can see how we've gone from a large trading range here into a smaller trading range. And this is the way this structure technique is going to teach you to read the market. Let me just go closer into this area of price now. So once you start to read the market like this, you're going to find with multiple time frames, it's going to be easier for you to do your structures. And again, watch that video coming out this weekend. It goes through it in more detail. So when we identify we had that break of structure here, this became a new swing high. This was a swing low. So my current trading range is this move here to downside. Why is it important to know your trading range? Because you need to know which directional bias you have. Now, at this point in time, we have a bearish bias. Now, there's reasons that I would understand looking at this move. I know that this high is going to be taken, but that is something completely different to structures. Now, we may do spin-off series on this, but for now, I want to stick with structures in this channel to teach you everything I know, and hopefully it's going to help you. Now, when we mark this off, this becomes a valid break of structure. Okay, so this is a valid break of structure once, not when we see this wick through. This is not a valid break of structure. We need to see a body close like we see here. So when we see this candle wick through, that's showing me potentially we're going to fall away. And that's what happens. We make this higher low in the market, then we push up and we break on that candle. So once we see this break on this candle, this does give me a new swing point as the market. Remember what I said? I was looking for that candle to close down. That's where we see that candle closing down. That gives me a new swing point. So that gives me a new break of structure. So we have another break of structure here to the upside. Now, as this candle closes down, that gives me another new swing point at this high here. Now, at the same time, I can mark one off from this low where we can identify at this point, we only sweep the high, mark it across, and we sweep this low, okay, until we have a break of structure here. Very quickly, we can identify this. If you're struggling with your structures, then stick with me in this channel. Okay, let me know in the comments if you are struggling. If it is a key thing you do struggle with is your structures. Remember, the market structure not only is going to identify that bias in the market, it's also going to identify the different structures in the market when we have our swing and internal structure and fractal structure. Now, you can learn much more on that inside the advanced section of the Novice to Pro Mastermind, which is inside that 90-day profit training system. So this high, okay, becomes a sweep. Now, we may have had a very small break there, even to the upside. So even if we have this as a valid break of structure, I can mark this off. Okay, so if this is a break structure, which it could very well be, there's a very small break there, then I have a new low down here. And this becomes my valid break of structure. So my trading range is this move up as we push down. And again, there's ways for us to understand with these blue candles. Once we close through on this red candle, I know we're going to run this low and the market continues to go down. So this is the easiest way, okay, to look at your structures. Now I can mark off my current high. So this is my current high of my trading range. So now we'll go forward a candle by candle approach. Right, this candle closes up. This identifies a new swing low for me. So now I have a trading range. This is how we look at marking our structures. Okay, so I have my trading range. Let's just go forward quickly. Okay, a bit too quick, but we break straight back down. So what this creates is a new breakup structure. Let me slow that down so we don't go so quick next time. Actually, let's go for 5 × 5. Now I can move this high to here. Okay, because this is now a trading range that I'm in again, and I continue to look for potential sells, but we use multiple time frames. We're not taking a trade off this time frame on the daily. We're looking to use multiple time frames. On this single time frame, I do have a bearish bias. This is my trading range. If we just go forward and see whether we continue up or down, okay, we're going sideways at the moment. We do nothing, okay, on this time frame until we see that break. So it looks like potentially we could have a break to the upside. Let's see if we do, or we continue down. And we're still going side. Look how long we've been going sideways from. Now, this is when, if you see this happening with a pair like this, you're best just to leave this pair alone. Okay, go to another pair. Until you see it close above this high or close above this low, we don't have a directional bias. Okay, yes, we can be looking for trades at this area, understanding supply and demand, to look to sell down to this low. That is a possibility. We do get that off this move here. Okay, and then we have what we class as internal structure, which is an internal breakup structure here that we have to downside. And then we have a new area of supply price come back into, and then we could now see a run lower. So it's all about understanding, reading those markets. Okay, let's see if we continue to go down. This is a very big trading range. Okay, I'm going to speed this up a bit. Silence. Let's just mark this across. So what do you think of these videos? You know, just myself being me, no script, nothing like that. We're just going through, okay, teaching you how to read the market. Yep. Now this is on a replay mode, I know, but you do the same thing in live conditions. Look, we're still moving inside this range. We do nothing. Yes, we have trades we could take up here. We have all these movements on the lower time frames, but right now, this single time frame, we don't do nothing. And there's a long period here where price is just moving sideways. You're waiting for that breakout, and we get the breakout. So we have the break of structure eventually here to the upside. Get rid of this level. So we've gone from that bearish range to now the bullish range. And where do we look for our low? Well, we have a low here in the market as my new low in the range. Now, if you want to understand why I'm marking it here, watch that video come out this Sunday. It goes into more detail. And I can mark off this as a new trading range high. All that now gives me is a new trading range to the upside. We also have areas here of demand where we can pull back into these areas of imbalances. We have discount, premium areas. There's a lot to take into trading. But until you get the structure correct in your trading, you're not going to progress as a trader. You're going to get the structure wrong. You're going to find your entries are going to come wrong as well. Let's go forward quickly with this, see what happens. Okay, so again, we're doing the same thing again. We're looking for price to break and close above the high or the low to show the continuation of that move. Now, we do have an area here of demand. Prices reacted and we're pushing up quite strong. Expect a break to the upside here. Let's just see if we do. And we've dropped back lower and now we've broken down. So you can see how quickly this can shift. Very close to breaking the high with this strong move up, but then we reversed. This creates a new break of structure. So now I can look for a swing high in my trading range and a new swing low. So we went bullish and now we've gone bearish again. Okay, so we have an area here of supply. Again, we can look for potential sell continue lower. That's what we're looking for. But obviously we're looking at different time frames. We're looking at higher time frames to see if this is in line and other things. We'll do that in other videos going through multiple time frames. So we came back up into this area, pushed back lower. Again, we wait for the break to know the directional bias. So we just broke out bearish, just there. So we change that to a break of structure. My current trading range is now going to be from this high to this low. So we continue to be bearish here. And we look to see if we close above or down. Okay, this is just really giving an exercise to understand
the directional bias. So again, look, we break structure bearish here. So we have a new swing high, quick break to the downside, and we can mark this out as a swing low. So our trading range again is still bearish. See which way we go. We've just swept the high and now we've closed it. So you can identify another break of structure. So we basically shifted bearish on a couple of moves and now we've gone bullish. And this is going to be my current swing low. Now we're still waiting for a high to be formed, and we've formed a new high. So we can mark this off as a swing high. So we have a new trading range is bullish. And let's just go forward, pull back into an imbalance area. And we've swept the high. And now we've broken through. So now we have a new break of structure. We can move this to this low and we wait for a new high to be formed. And at the moment, there's no high formed. We continue going forward. And we now have a high formed. So we ignore this price action here, okay? This is now my trading range. Yes, we have some zones here that we can look for potential orders to take buys up again, but we just continue forward. Okay, we swept the high again, dropped lower, and potentially we're heading towards this low. So are we going to hold here from this area of demand and then push higher? Or are we going to see a reversal back bearish? Let's see. And the market's moving sideways, still inside this range. Look at how we continue to move sideways. Now, did we break through? No, we haven't yet broken through. Continue along. Again, like we saw before, a long-term range. Now we've broken out. So now we can mark that across as a break of structure. And this keeps you out of losses in the market. And again, this becomes my new low. And we have a new high. So the market is still bullish. We still continue to be moving higher. And now we've just dropped bearish. So you can see now we've created a bearish break of structure. We have our current high and we have our current low. So this is my trading range. We're around about the 50% area. Let's see if we break down. Swept the low. Okay, looks like we're heading back up from the low. And again, we sweep the low. And now we've broken up. So what this was a sweep down here, taking liquidity out of these areas of imbalances. Again, that's not really what this video is about. We continue to understand this is our structure. Move higher, we're waiting for a high to be formed. We create a high just here. Okay, this is how quickly we can just go through the structures. And you can do this when we had a quick break of structure. Do this when you're actually trading live. Okay, this is not going to change. It's always going to be the same. So we can now move this to this low. We might have, let's have a look at this candle. Yeah, we just had a close. So we have a current trading range now at this high. Okay. And let's go forward, see if we break out. Right, we do, we break out. So we have another break structure. Now you can start to see, and this is the thing to understand, how we have a large trading range, break of structure, and then we're starting to see this smaller break of structure. Now, very often we could see a pullback at any point. We start seeing these types of movements. So we can mark this up to here. Let's go forward. And we may have, let's have a look. Yeah, we have a new swing high. So again, we're looking for the continuation bullish. And we did just break out and then shifted back bearish. So at this point, this becomes this high. Yeah, this becomes a new low and it becomes a break of structure at the same time. This was a break of structure bullish. And you can see how smaller swings, and now we've shifted with a strong momentum drop. That gives me a new swing high up here. Just waiting for a new low. Okay, so now we've formed that low. We saw the close up on this candle. That creates a new trading range low. Now, I will go through in more detail step by step what you're looking for, marking this out. I just want to do this video quickly to show you how easily we can go through marking your structures. Once you understand this concept and you get your structures correct, then we can go into more advanced techniques. So again, let's go forward with price. Let's see if we continue to be bearish. A couple of sweeps there. And we're starting to see that longer ranging price. Why? Because we went from short or smaller range to a larger trading range. So we have the breakout, and let me see. Yep. So we have a new high. This becomes our new breaker structure. And we just go forward. We wait. Now we've got that bullish candle, creates a new swing low. And that's my trading range. Okay. So we continue to be bearish. So we're just looking for that continuation lower or reversal bullish. And we get a reversal, a strong reversal bullish. Now, when you start applying this with multiple time frames and everything else in conjunction, you're going to start to realize that this reversal potentially was on a pullback, perhaps on a monthly time frame. Now we see the strong bullish move higher. We have our current low. Let's look for a new swing high to form. We have a new swing high right up here. So we have a large trading range. Again, we could see, okay, sideways motion, and we get a break straight away to the upside. So you can start to see that smaller range formation again. Again, this is going to be our swing low. And we wait for swing high. And we haven't created a swing high. Now we have, and we broke structure as well. So this becomes a new swing high, and this becomes our breaker structure. Okay, so we've gone bullish, back bearish again. And again, we'll continue to go until we see a pullback. Now we've got a pullback, we have a new swing low. That's our new trading range. Okay, simple as this. So this video has been going on for a little while. It's really just a video to go through demonstrating on one time frame the quicks of marking up your structures. So we started over here, okay, where we saw this small bullish movement, went bearish, then we had a large trading range and eventually went bullish, bearish on a couple of moves there, then went back bullish. We had a small bearish reversal, then went back bullish again, went back bearish, and now we just reversed back bearish once again. When you apply this for multiple time frames, you're looking at the higher time frames is going to help you. Now, right now, potentially, I would say, looking at this pair, we're most likely to head up and run this high again. And this is potentially a swing pullback on a higher time frame. Let's just see. And we run that high. Now, there's a reason why I expected this to happen, and it's understanding liquidity and imbalances in the market. Now, more of this I do teach inside that 90-day profit trading system. So I hope you've enjoyed today's video. I hope it's giving you some clarity on understanding with using structure in the market, how quickly we can back test this. But for now, if you want to check out the 90-day profit trading system, we have 5 spots open for this month. So do check it out. There's a link below in the description of this video.